everybody. Jeffrey Dunyon here with Safe Option Strategies. Welcome to another episode of Moving Markets, the podcast for serious stock and option traders that want to get a feel for why the markets are doing what they're doing, and more importantly, how you can take advantage of it, how you can prepare for it, not get caught off guard with some of these crazy moves that the market makes. Glad to have you here. This is a special weekend edition because we were off air on Thursday and Friday this last week, and just so that you know, I wasn't slacking or doing anything like that. My son and daughter-in-law had a brand new baby girl that they welcomed into the world on Thursday afternoon. I was able to drop everything on Thursday morning and head up to their place a couple hours away from me and be with their older daughter while their younger daughter came into the world. And so we spent the weekend up there, and that's why you're getting a special weekend edition of the Moving Markets podcast. As always, I hope before you get to the end of the podcast that you'll like it, that you'll subscribe to it, that you'll give us a comment. I am going to address one individual who sent a comment in. Had several comments come in between right now and the previous episode that we did, and I'm going to address a couple of those comments. But once again, very glad to have you here. Check us out on sostrades.com if you want to learn more about the education we provide, get involved in some of the trades that we send. We're off to a phenomenal start this year. Those members that are already following our trade recommendations and mirroring our portfolio are well on pace to have another 75+% year. Don't forget, we finished last year at 114% return on the trades that we sent out to the members of our program. So check us out at sostrades.com, see if there's a membership package that fits what you're looking for, and please enjoy the rest of this presentation. Talk a little bit. Since I didn't do a podcast on Thursday or Friday, I would be remiss if I didn't talk a little bit about the earnings reports that came for Apple, for Meta, and for Amazon. Apple struggled. There's no getting around that. They are having a rough time. Apple, from a stock trading perspective, look, it's a healthy company. It's an incredibly profitable company. It's an incredibly valuable company. But Apple is struggling increasing their profits because the reality is, with the exception of this virtual reality set that is vastly overpriced, it's not going to have a big market. There aren't going to be that many people, I think, that purchase and use this new VR headset that's $3,500. And with that exception, when's the last time Apple really wowed us with something new, or even a really big update to one of their existing products? I know they try every couple of years with the iPhone to come out with something, new and brilliant and different. They've had some trouble with the rollout of the iPhone 15. The larger one has a casing and a screen that crack easily if you stick it in your pocket. It's not selling well in China, which is a huge market for Apple. They've had some issues with the Chinese Communist government over there, restricting iPhone usage with government employees. They're under a lot of pressure. I don't think this VR headset is something that's going to bail them out. Now, in all fairness, Apple is still $1 trillion company. They still have a lot of cash. I'm interested to see if they can come out with something new or a dramatic enough redesign of something that it's got some wow factor and it captures people. I still am a huge fan of their products. I have an iMac on my desk. I use a MacBook Pro laptop. I have an iPhone. I have an Apple Watch. I don't want to sit here and rag on Apple like they're not a great company. I think they are a great company. They may not be a great growth company anymore. Apple may be a company that you sit on and hold for long periods of time, knowing that your money is well taken care of or well protected, but it's going to come with some ups and downs, and not as many ups in the near future as I think. And I'm not any kind of brilliant analyst saying that. I'm echoing what a number of people have been saying about Apple for a while. Apple's services continue to grow, but until they expand those services even more broadly and show more growth in there and show that they can be a great growth company with the expansion of their services, more like what Microsoft is doing, they may be trading to the downside for a little while, or at least staying down for a little while. On the flip side, Amazon reported and absolutely hit a home run, knocked it out of the park. They opened up high and remained high throughout the trading day, finished the trading day up over 171. As it relates directly to our trade, our Amazon trade, while not yet profitable, it is trading at a spot now where our short call is in the money. And I believe Amazon, after a little bit of profit taking, maybe in the early part of this coming week, I think Amazon will continue up, or at the very least stay up above 170, and you'll see this trade kind of mature to where the difference between the values of these two option strike prices will become closer to that $5. And with a 390 entry point, we should be able to get out with 20%. I'm guessing within about a week, maybe a week and a half, we'll probably see it get up in that neighborhood. So looking good on Amazon. And Amazon just hit all the right numbers. They beat on top and bottom line. Fantastic trade all the way around, and so you've got to love what Amazon did and how they did it. Also reporting on Thursday after the market closed. Why am I momentarily blank? Oh, Meta. Can't forget Meta. Holy smokes! Sadly, I don't trade this company. I do option trades on them from time to time, but I don't trade them as a regular thing. But this is just absolutely incredible. They tripled their profits. They literally tripled their profits. They crushed the analyst expectations. Expectations may have been lowered a little bit for Meta, but they absolutely unequivocally crushed the expectations. Whether you're a fan of Mark Zuckerberg or whether you absolutely hate Mark Zuckerberg or you're somewhere in between, there's some things he has done that I don't like. I'm kind of indifferent, but I got to tell you that the guy, he has the Midas touch. I think everything this company is doing, unless you have a moral opposition to it, and I know some people do, that there's, Facebook unfortunately makes the news a lot because of either they're censoring viewpoints that they don't like, or they're allowing things on their platform that are reprehensible and disgusting and vile and evil. And it can at times be a tough debate on what is allowed that is maybe morally reprehensible versus what is a violation of allowing for free speech. And I have some ideas on that, and I think Meta violates those ideas at times, and on other things I think they're on the bubble a little bit. But we can have that debate until we're blue in the face. The reality is this was a huge move up on huge volume, and this thing has an amazing amount of upside to it. I have done, like I said, option trades in the past on these guys. I've never owned the stock. Don't know if I ever will, because there are some things I don't like about the company, but you got to admire what they're doing from a profit standpoint, and how they're a money generating machine. It's like they're a cash printing machine. So with the moves on Meta and Amazon specifically, the NASDAQ had a great day, 2 days in a row of a nice leg to the upside, as did the S&P. The Dow Jones finished to the upside, but they struggled a little bit to get there on Friday. They weren't moving real spectacularly early in the day. Oops, I went to the DIA index fund instead of Diamond. There we go, instead of the Dow Jones. But they finished the day on an up note. They rallied and finished strong to end the day. You can see the headline that is still here, even though it's Sunday morning. S&P at a record close, fourth straight week of being up, strong tech earnings. Amazon and Meta had the ability to turn around a number of things that sold off on Wednesday. That some of that rebounded on Thursday, just because I think companies like AMD and Microsoft got beat up on very, very unfairly on Thursday after their reports on Tuesday night. And then people kind of, this may be a rude way to say it, but people kind of pulled their heads out of their butts and realized these are good companies. They're still going places. They still have a lot of potential upside, a lot of possible growth, and people kind of figured it out and traded them much more to the upside on Thursday and Friday. After their earnings miss, AMD, they had the big day of sell off, and then they've had 2 strong days after that. And I don't think they're going to get anywhere near a technical crossover on the 5 and 20-day moving average or on the um, RSI. They did cross over on the MACD. I think that's going to swing back to the positive side with Monday and Tuesday's trading. And we may not have to wait for them to come down and test a level of support at 150 or even at 140 to decide it's time to get in for the long run. So we'll look at doing a trade on AMD and maybe doing a trade on Meta this coming week for those who can stomach it. A lot more earnings to go this coming calendar week. However, the majority of the earnings season in terms of the companies that we follow and watch very closely are past us now. You do have some companies that will continue to report. Caterpillar on Monday morning before the market opens, that is tomorrow morning, McDonald's. Those are big ones. You can't discount those and overlook those. Those are big companies. They're Dow companies. They could move the entire Dow Jones Industrial Average with good or bad news on Monday morning. On Monday afternoon, Palantir is really, I mean, there's some other companies of note, but that's the only company that's reporting that day that I pay a little bit of attention to. Eli Lilly and Spotify, I do pay attention and follow these companies. They will report on Tuesday morning before the market opens. And on Tuesday after the market closes, we are going to be keeping a really close eye on both Snap and Ford because we have both of these companies in our collar trade portfolios. Ford has been on a pretty... They've had some days where they've given back a little bit, but a pretty strong bullish run for the last 2.5 weeks or so. I would love to see Ford go back up over $12.50 a share. Don't know if they're going to have the moxie to get that, but we're well set up going into the earnings report, and I don't think we need to make any sort of changes on what goes on there. All right, I know this was not a real long presentation. I'm going to wrap things up right here for both the members and the non-members of the Safe Option Strategies program. I hope you are having a good weekend. We'll get this online right away, and we'll be back for a very normal, very regular schedule throughout this week, so you should get a new podcast drop each of the 5 trading days next week. Thanks, everybody. Have a great rest of your weekend. Bye-bye.